Welcome to the Rotary Club of Edina, the #1 club in the universe. Yeah, baby. We're very humble too, right, Sylvester? My name is Michael Stanzak, and I am humbled and honored to serve as your 67th president. Thank you. We have a fun and inspiring meeting planned today with a panel discussion of building an inclusive economy in Minnesota. Our keynote speaker will be Alene, Tchourumoff, Senior VP of Community Development Engagement for the Federal Reserve Bank of Minneapolis. Participating on the panel will be Jimenez, Executive Director, Latino Economic Development Center, Kasey Kier, National Community Development Manager of Bell Bank, and Louis J. King III, what a cool name, I like that. Louis J. King III, CEO of American Summit Academy OIC. Thank you all for being here in person. Bob Stellick, we so appreciate it. Ex-banker out there knows a lot about this stuff. And for all of you that are joining us on Zoom, we so appreciate it. You know, before we get into the panel discussion, I thought we could all use something a little uplifting. So our first member spotlight today is on Josephine Lynn Wilson, who was born Saturday, May 14th at 9 p.m., to Ryan and Tori Wilson. Isn't she adorable? And Ryan writes, our 2-year-old Leona seems to be adjusting well. She started calling her Ozzy, short for Josie, and since she calls herself Ona, our girls are now Ona and Ozzy. How fun. Our next member spotlight is on Mary Youngren. Mary, are you here today? So Kelly Burnett, do you know what Mary Youngren calls herself? She calls herself Connector-in-Chief. That'd be kind of cool. You're Connector-in-Chief of American Family of Advent Talent Group, and that picture is taken at the Minneapolis-St. Paul Business Journal 25th Annual Women in Business Award. She was honored as the most influential woman in this industry-leading executive, entrepreneurs, and business owner role. As our keynote speaker, Alene was also there, and she was recently honored. So I don't know if she ran into Mary or not. So it's been rumored, Catherine, that the best job in the world is to be a grandparent. And there is Toshi Metzger visiting her adorable grandchildren, Coco, who's 3 years old, and Bibi, a 1-year-old. It was a wonderful time. I don't know, I think it would be fun to be a grandparent. I hope I can be a grandparent someday. So we Rotarians know how to have fun. Do we know how to have fun, Tommy Bemis? Let's talk about having fun, baby. So we were at it wasn't the Black Business Mixer, it was actually a progressive dinner tour, and we started at Tommy's Restaurant, Pimento Jamaican Kitchen on Nicollet Avenue, and there's Dave and Mary Swinson, Shelley Loberg, our treasurer, Sutton McGraw, and past President Josh Sprague. Also there were Tanya and Sylvester Thomas out on the patio having a great time. Also was Toshi Metzger, Kelly Sprague, and some enthusiastic loudmouth guy. I don't know who he is. So Rotary in the news. We went on a bus tour last week to the Minneapolis Women's Club. And I'm sure you're saying, why did we go to the Minneapolis Women's Club? Well, the reason we did is we visited the kitchen that Involve Minnesota uses. Involve Minnesota is a labor of service love for the Snyder family. There's Ethan, the son and client connector with his mom, executive director Melody, and dad Grant. Also there is a picture of Lieutenant Grant Snyder, the Minneapolis police. He's still on the force, and he's Involve's director of operation, and he shows the meal delivery van with a liftgate that the Rotary donation funds purchased. So thank you, Rotarians, for allowing us to give money to Lieutenant Grant Snyder for the liftgate for all the food that he feeds the homeless. So we went to the kitchen, the commercial kitchen, and every day they serve 1,000 meals. It's amazing. And the people they serve the meals to are people that are in encampments. They're in homeless places. I mean, these are people you see on the side of the road. And the son, Ethan, well here, let me show you what a sample meal looks like. There's really good food. They prepared that day. We ate it. I mean, it was delicious chicken with capers and cream sauce, risotto, and warm bread. And Ethan said this may be the only constant of the recipient's day. The hope is that the constant allows focus for a recipient to make life changes. And Ethan was very upfront, and he shared with us he is addicted to methamphetamines, and he's been free for 3.5 years. And because of who he is And where he's been, people in the encampments feel very comfortable talking to Ethan. So every day he goes and delivers meals and try to make these people's life better. I mean, talk about the hands and feet of the Lord. Involved Minnesota is doing it, and we're so fortunate to be able to support him. So please rise for the invocation, the Pledge of Allegiance, and the four-way test. Lord of the universe, Rotarians worldwide acknowledge your power and your expectation that we be of service to mankind. Let us renew our obligation to fill that expectation, just as the return of spring renews growth in the world around us, with a new commitment to help others in our community, our nation, and our world. With the power, influence, and wealth that we as leaders in this place most certainly have, let us always remember that these are a blessing from you, and that charity is more fulfilling than decadence. And the golden rule is a much richer yardstick than any bank account. Amen. Amen. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. In the four-way test of the things that we think, say, or do, first, is it the truth? Second, is it fair to all concerned? Third, will it build goodwill and better friendships? Fourth, will it be beneficial to all concerned? Please be seated. Our keynote speaker today is Alene Tchourumoff. What a cool name, Tchourumoff. I found out that it's Russian. I like it, Tchourumoff. I'm even saying it right. Alene Tchourumoff is a Senior Vice President of Community Development in the Center for Indian Country Development, leads the bank engagement with communities throughout the 9th District to promote economic opportunity for low and moderate income people and those living in Indian country. Key focus areas include early childhood development and affordable housing. Prior to joining the bank in December 2018, Alene served as chair of Minnesota's Metropolitan Council, where she built strong partnerships with local governments and community groups to advance travel, housing, and other critical infrastructure. Previously, she served as Minnesota's first state rail director, led Hennepin County Public Works Planning Department, and worked extensively in China and Southeast Asia on public policy and public health initiatives, including combating HIV/AIDS in China and Vietnam. Alene holds a bachelor degree in business administration from George Washington University School of Business and a master's degree in public policy from Harvard University Kennedy School of Government. Alene was named a 2020 Women in Business honoree by the Minneapolis-St. Paul Business Journal, much like Mary Younger and Mary Swinson, and is a member of the Minnesota State Attorney General's task force dedicated to improving women's economic security. Alene lives in St. Paul and has 2 boys, 8 and 12 years old, to keep her busy. Please give a warm Rotary welcome to today's keynote speaker, Alene Tchourumoff. Thank you. Thank you for being here.
Thank you. Well, thank you for that warm introduction. My name is Alene Tchourumoff. You did say my name correctly. It's a long one, I know. And I am the Senior Vice President of Community Development and Engagement, and I do oversee also the Center for Indian Country Development. I want to say thank you to the Edina Rotary, to Mike for that really warm introduction, and to Josh Sprague for being really the champion for having the invitation to be with all of you today. So what I'm hoping we can do today is spend a little bit of time talking about history, economic inequality, and where we are as a region. And then we're going to dive into a panel discussion with the people that we just talked about a minute ago, Kasey, Lewis, and Henry, to get reactions and talk about their work and how it intersects with the research that we've been doing. But to start, so I'm going to flip through really quickly. Oh. Uh-oh. See, I touched the wrong button. I'm sorry. Well, I can keep talking without the slides. I'm going to start my comments by doing a little bit of Fed 101, and then I'm going to go into a little bit more detail on the series that we hosted with the Federal Reserve Bank of Minneapolis alongside of our colleagues across the country called Racism in the Economy. So I have to start all of my presentations with this disclaimer that the views that I present here are mine and not necessarily the views of the Minneapolis Fed, the Federal Reserve Bank, or the Federal Reserve System. So now before I dive into my actual presentation, because that's always fun to say, I know Rotarians are really engaged, and so I'm just going to ask you guys to shout out. The Minneapolis Fed is one of several reserve banks across the country. How many are there? 9, 14? Any other numbers? Who said 12? 12, there you go, 12. We are one of 12 Federal Reserve banks across the country. So when Congress created the Federal Reserve System, they wanted to create a decentralized model so that people across the country had their perspectives heard in Washington, and that's why they created 12 district banks. So the Federal Reserve System, all 12 reserve banks, plus the Board of Governors in Washington, D.C., serves as America's central bank. We're most well known for our role in monetary policy as the Fed seeks to carry out our congressional mandate to manage stable prices and maximum employment. We hear a lot about stable prices right now in the news, and inflation is at the top of many people's minds. We're looking at managing inflation at the same time as managing maximum employment. That is, as many Americans as possible, or as many Americans who want to are able to find a job. The Fed's regional banks also play an important role in fulfilling our responsibilities in supervision and regulation. So we are also a regulator of banks. And some of those responsibilities take place under what we call the Community Reinvestment Act, CRA. And so we're one of 3 federal entities that's really responsible for enacting and carrying out that legislation, CRA. And that's actually one of the reasons why my department exists. So I'm going to ask, and I'm laying this out, it seems like it's kind of boring, but I'm laying it out for a reason. So CRA, which is an act of Congress to abolish the practice of redlining, and that was when banks used to refuse to lend to borrowers in certain neighborhoods. And that was exclude people from affordable mainstream mortgages and other consumer credit products because of where they lived, not necessarily because of their credit or their borrower characteristics. The map on this slide was made available to us by the University of Richmond's Digital Scholarship Lab for a project called Mapping Prejudice, or Mapping Inequality. And these images are accompanied by an explanatory and interpretive text. So this is a government-sponsored map of the west side of St. Paul that was accompanied by this description, and I'm going to quote it so that you know that these are not my words, but these are the words that were accompanied by this map. The ghetto district, Russians, Jews, Mexicans, Chinese, and riffraff live here. The most undesirable district in St. Paul. Much reconditioning is necessary, also very inadvisable. And so the color coding on this map, red is the most hazardous area, but what's striking about this as well is how detailed it is, how much time and energy it took to build out that one little corridor to go to the left, to really draw around the neighborhood. So when Congress passed the CRA in 1977, it was one of several laws that were passed to address unequal levels of credit and access to credit. And again, it was focusing on whether or not banks were lending to all the communities where they did business, not just certain ones. So although redlining was prohibited by law, we have studied and we continue to see the impacts of redlining and have actually persisted, actually continue to persist. And you can still see in certain neighborhoods that were once redlined the historic disinvestment in those communities. My department at the Federal Reserve was actually created from the CRA, and community development departments across the Federal Reserve System are responsible for understanding and researching what's happening in communities across our district, and to really have a sense of what's happening on the ground. So that's my 50,000-foot view of the Fed and some of our regulatory responsibilities. I want to switch gears a little bit and talk about the reason why we took up this series called Racism in the Economy. Sorry, I was just maybe not close enough to the mic there. So now you've had that primer on the Fed. We did a series along with our colleagues across the reserve system called Racism in the Economy, and it was really about looking at the role that structural racism plays in the U.S. economy. So the example that I just provided was federally sponsored discrimination, essentially, and that you see that those structures actually continue to persist. All of these events are on our website, and I'm going to give you a link to this at the end of my talk so that you can actually, if you're interested in seeing it. I know I actually talked to a couple of folks who said that they actually watched a number of the sessions throughout the year because it was a really good opportunity for us to dive into some of these topics. So you might be sitting there asking yourself, why is the Fed talking about racism? And the answer has to do with our core mission. And that was what I talked about earlier, that dual mandate, which is to use our tools to pursue maximum employment and to balance stable prices. So another way of looking at that is to say, how do we think about supporting a strong workforce and a strong US economy? A lot of institutions like the Minneapolis Fed have historically talked about race without really engaging in a conversation about racism. When we know that racial identity is a measurable, significant, and persistent predictor of labor market outcomes. So that means that how much people earn in their lifetimes, what jobs people are likely to have, and their overall health and family wealth is based on a superficial determinant like skin color. So why does this matter to Minnesota? I think it matters as a nation, but why does this matter to Minnesota? I'm going to go through a couple of reasons. First, let's start with demographics. Here in Minnesota, since 1990, the share of the population that identifies Black, African American, Latino, Asian, and/or Native American has tripled and is projected to diversify even further over the next couple of decades. It's a common misperception that people of color only live in the cities. There's actually a lot of people of color driving growth in rural Minnesota. There are towns across the Midwest that are trying to attract new immigrants so that their communities can actually grow. So I think that that's something that we continue to see. As population continues to diversify racially, we've seen persistent and growing gaps between white Minnesotans and people of color on a number of important outcomes. So that's the demographics. Now let's look at employment. In this slide, you can see unemployment gaps in Minnesota. You can see something else in this chart as well. So the gold line is Black unemployment, the blue line is Asian unemployment, and then the white line at the bottom, the navy blue line, and then the light blue line at the bottom is white unemployment. So during the Great Recession and during the pandemic, Black unemployment rose faster than white unemployment. In the 2008 financial crisis, if you look at 2006, and I don't know if you can see that on this bar, but I take my word for it, in the financial crisis, you can see that it took almost 10 years for Black unemployment to reach the level of the 2006 level, right? So it was 2006, we had a huge spike in unemployment in the recession, and then it took 10 years for Black unemployment to recover. It didn't take as long for other levels of employment to recover as it took Black unemployment. And so we see that while the unemployment rate is way down, the other thing I want to show you or want you to pay attention to is you see that the relationship persists. So even if we're not in a recession, on the far end of the chart, the distance between the gold line, the light blue line, and the teal line, we maintain the gap even in a low unemployment environment. Okay, so in addition to persistent differences in unemployment, we also have large earnings gaps between different racial and ethnic groups in Minnesota. So on the left-hand side of this slide, you can see differences in median earnings for individual workers in Minnesota. And they're somewhat stark, right? 27,000 median earnings for Native Americans versus 47,900 for white households. I'm just gonna pause and let people look at that for a second. We also try to disaggregate here. In this instance, we're disaggregating Hmong Americans versus Asian Americans in general. When you put together Asians as one large group, it kind of diminishes the story, it diminishes the picture of what's happening with subpopulations within that larger bucket. And so I think it's important to recognize that Hmong Americans might be experiencing something different when we say Asians, we might put them all into one category. The other thing that we see on the right-hand side of the screen is that we've talked about gaps in median family income, but the median net worth of households in Minnesota, so we have $211,000 for white families, $18,000 in median net worth, and that is measured by assets minus liabilities, is $18,000, and then zero for Black Minnesota families. So you might wonder, why do these gaps persist? And one of the things that we wondered was, well, are there differences in educational levels? So people of color are more likely to be unemployed, and when they are employed, they're more likely to earn less. And you might think that, again, it's because of maybe they have different education levels. And so we dug a little bit deeper on the earnings and unemployment data. We wanted to see if these gaps persisted, and they do. So for example, the median white household without a college degree, which is the bars in the middle there, earns about $30,000 a year. That same number is just about $17,000 a year for Black households. And you see, those similar patterns persisting. There's also a fair amount of occupational segregation, which leads to overrepresentation of people of color in low-wage jobs. And so you see that the occupational segregation piece ends up persisting not only in wages and overall household wealth and educational outcomes and things like that, but it's also, you see the impacts being carried disproportionately in the pandemic, where people, maybe frontline workers, were more likely to be exposed to the pandemic and not necessarily earning as much money. So that's a little bit on, I feel like this is I'm glad we started with something uplifting in this conversation, because I feel like this is a little bit a heavy topic. But, so that's education. We've done unemployment, demographics, wealth, and education. And I'm going to talk a little bit and switch gears and talk a little bit about home ownership. And so home ownership is really important to the Fed's work for a couple of reasons. First of all, housing is really important to the U.S. economy. And when a segment of the U.S. economy doesn't work for everyone, individual opportunities are constrained and the aggregate economy suffers. So the Fed's target interest rate also influences the prices that mortgage lenders set. So housing is traditionally considered to be a path for individuals and families to create wealth. And so this is one of the reasons why we spend a fair amount of time talking about housing. In our series on racism in the economy, President Raphael Bostic of the Atlanta Fed pointed out that today's patterns of segregation and disinvestment in communities are often not chance occurrences or due to some broad-based resident racial bias. They're too often the result of systemic racism in housing. And so federal support, like I talked about earlier, for property ownership among white families goes at least as far back as the Homestead Act around the time of Lincoln. It continued well into the time when my parents' generation were buying their first homes. And these public investments in helping people become homeowners didn't just benefit the white homeowners, they translated into wealth that would accrue across generations. So again, turning to Minnesota, white Minnesotans have the 6th highest homeownership rate among white Americans. For Native Americans and Minnesotans of color, that rank is 37th. And so the gap between the two is the 4th highest in the nation. So I'll say that one more time in a different way. Minnesota has one of the highest homeownership gaps between white and Black families in the country. And so that's, I think, kind of surprising to a lot of people. So one of the things that we are interested in is, why do these patterns persist, and what's really driving them? And so we see a lot of headlines, I think, in the media in particular, policies and practices that people are concerned about. If a person of color goes in to apply for a mortgage, are they more likely to be denied? And a lot of this research that's focused on in these headlines says yes, they are more likely to be denied. One of the things that we were interested in is a lot of this research that these headlines focus on are actually based on publicly available data. And one of the critiques is, well, that doesn't account for credit scores, it doesn't account for loan-to-value ratios and other borrower characteristics that are fairly important to lenders. And so we at the Minneapolis Fed have access to confidential, what we call Home Mortgage Disclosure Act, HMDA data, and that gave us the opportunity for the first time to be able to look at confidential information that banks are using to make lending decisions. And that lets us see, like, borrower credit scores, loan to value, those are the things that I just mentioned. We looked at the 30-year mortgage, conventional conforming mortgage. And so this is a mortgage product. If any of you are mortgage lenders out there or bankers out there, this is something where bankers are actually pretty highly incentivized to provide this product, because it's a standard product. You can sell it on the secondary market and you make money off of it, right? So people who are making mortgage loans are often want to make this type of loan. And so we found, in general, the denial rate overall is relatively low. So in the United States, it's around 3.8%, and the Twin Cities about 2.2%. So what we learned. So overall, there are fewer applicants who get denied in the Twin Cities to compared to the national numbers. However, the relative denial gaps are larger in the Twin Cities compared to the nationwide data. So for every 10 white applicants who are denied, the light blue is kind of national numbers, 20 black applicants would be denied, and in the Twin Cities, 25 black applicants would be denied. So we continue to see a bump. So it's happening on the national level, but then we continue to see a bump in the Twin Cities, and it's kind of unclear exactly why that is. And so again, we are comparing people who have similar credit scores, similar loan to value. So it's more of an apples to apples comparison because we have access to this confidential data. But it's not a complete picture. So we aren't able to see wealth. We aren't able to see employment history. There are things that are still really important to lenders that we don't have a full picture of. So we can't say that this is due to some racial bias on the part of the mortgage industry. But what we can say is that we can eliminate these particular reasons for disparities in mortgage lending in this really particular 30-year conventional mortgage product. And so I think it's kind of an interesting finding. It's something that we've been talking about. You may have heard about it in the news. We've gotten some coverage for it. It's something that we want to dig into a little bit more and have a better understanding. Most people, when they apply for a mortgage today, don't ever really meet their lender, right? People don't really walk into brick and mortar banks anymore and say, I want to fill out a mortgage application. A lot of this is happening online. And even if you do meet the initial person who's helping you with your application, the underwriter never sees you, right? You never meet the underwriters. They're people who are processing information behind the scenes. And so what's happening in the process, how people appear on paper, I think that's something that we would like to dig into a little bit more. So all of this, again, is to build to this argument about why this matters to not only the country, but also to Minnesota. So if we look at, we had a team of economists at the Minneapolis Fed and working with our colleagues across the system, and we looked and said economic growth is not a zero-sum game. We had people who tried to calculate the economic ramifications of gender and racial gaps, and they looked at disparities in educational attainment, earnings, employment, and hours worked. And their model found that if we had a racially equitable Minnesota, that our annual GDP would have been about $6.6 billion higher every year from 2005 to 2019. So we are really missing out on a lot of growth in our economy by leaving people behind. And I think it's something that is really important in how we talk about and how we think about inclusion. I know I was talking to a couple of folks before this conversation started, and people were asking, we know this is a problem, we want to do more, what can we do, right? And I think that there's an opportunity for us to think not only as individuals, but also as people who are, you work in a company, you work as an employer, what are our responsibilities and where are there opportunities for us to act individually as well as collectively to try to address some of these concerns. So that's my kind of big, broad overview. And I really want to say thank you for listening. And now we're going to switch gears, and I'm going to invite our panelists up here. So while you guys come up, I will kind of explain who you are. And then I want to make sure that folks know that you have note cards at your table, so that we're going to take questions by note cards, and hopefully pens as well, so you can feel free to think about what questions you might have. So with that, let's see if I don't mess this up. Here you go. This is the web link for the Racism in the Economy series if people are interested. So I'm going to start with Henry. Please come up. Please take a seat here. He's the executive director and president of the Latino Economic Development Center, one of our CDFIs in Minnesota, which is a community development financial institution. Prior to moving to LEDC, Henry was at Central Area Neighborhood Development Organization, where he successfully increased the budget, widened community outreach, and guided development of several community-driven programs that continue to benefit residents today. Kasey Kier from Bell Bank Mortgage, come on up, also serves currently as the National Community Development Manager at Bell Bank Mortgage since the beginning of 2022. I think there's a lot of folks in the community who know Kasey from her prior role at Minnesota Housing, working specifically on single-family programs. And Lewis King, please. Lewis King is the president and CEO of Summit Academy OIC in the Twin Cities, and I'm just so delighted to have all three of you on this panel And I did a really, really quick introduction of each of you, but I want to start out by asking each of you to just do kind of a lightning round and tell us about your work and how it matters and how it intersects with some of the points that I just laid out. And Louis, since you have the microphone, why don't you begin?
Good afternoon, I'm Louis King. I'm the CEO of Summit Academy and also President and CEO of OIC of America. We firmly believe that the best social service program in the world is a job. Prior to this, I've been a little bit of everything. I ran a restaurant that burned down over on Lake with Dave McCosker. The food wasn't that bad, all right? I was a school board member and I was a soldier for 10 years. I grew up in Florida. I've been here since I was 29. I'm 62 now. And looking at this room, I'm a young man, so I feel good. At 62. And I want to say this to you on the front, right? And if you don't remember anything else, we're going to overcome this. Just like we have everything else. I guarantee it.
Good afternoon, I'm Kasey Kier. I just want to first thank Alene and the Federal Reserve, and then also the Edina Rotary, as well as my panelists up here. It's great to be in such esteemed company, so I really appreciate that. I also feel really young because I'm younger than Louis. And I agree, I think we can definitely overcome this. And just a little bit about my history. I spent the last 27 years at Minnesota Housing Finance Agency, leading the homeownership division there. So all of the first-time home buyers programs, down payment, closing cost assistance, and one of our biggest goals was to look at how we could tackle closing the homeownership gap. Alene talked a lot about the homeownership gap. While Minnesota has one of the highest homeownership rates in the nation, we also have one of the worst homeownership gaps in the nation. And it's unacceptable, and we need to do something about it. I started at Bell Bank Mortgage in January of this year, and what brought me there is Bell Bank Mortgage is the largest mortgage lender by volume in the state of Minnesota last year. And it really gives me the opportunity to look at and expand the work that I've been so passionate about doing and looking at how we close the homeownership gap. We also can't do this alone. It has to be a private, public, nonprofit partnership. And so I appreciate all of you in this room here today, here to learn and listen and hear what is happening in Minnesota.
Thank you for the invitation. Again, Henry Jimenez, Executive Director of the Latino Economic Development Center. And I can't believe I'm saying this, but I feel even younger. And something to remember is, I believe it's close to 40% of the Latino population in Minnesota is under the age of 25. So that would make sense, because I don't know how many folks here identify as Latino, but I would say we're probably the youngest folks in this room. What does that tell me? That means there's a lot of opportunity coming for the Latino community and for the state of Minnesota. I mean, how many of your businesses or your work is impacting the Latino community? And if you're not, I would say it probably makes sense to start thinking about how you connect with the Latino community. I'm proud to say that as Executive Director of the Latino Economic Development Center, we support the start and the expansion of Latino small businesses. A lot of the Latino businesses on Lake Street probably have been touched or have been started through the technical assistance of the Latino Economic Development Center in the last 20 years. So I'm really proud of that work. We do that work through technical assistance, access to capital, education, and everything else you need to do to make a small business survive. And many of you know that it takes a lot to do that. So happy to provide that information. I want to give a shout out to my board member, Alene. She's on the back. So if you have a complaint, please talk to her afterwards.
Well, great. So keep the microphone because I want to ask you to do a little bit of laying out what is going on in the small business community with the Latino population in particular. And then once you do that, can you tell us a little bit about what some of the key challenges are? Because we didn't actually get to talk about that. We talked about individuals and households. We didn't talk about small business. So could you just give us a little framework?
Sorry, I missed the first half.
Sorry,
I was so
I talk really fast too. So how are Latino small businesses doing in the Twin Cities? Can you tell us a little bit about the landscape? You talked a little bit about demographics, the relatively young population. Now tell us a little bit about, so of the working age folks, where are we from a small business standpoint?
Yeah, well, you just saw that data, and if that doesn't upset you, I mean, I can tell you that every time I see it, I feel like this anger. I have to say, it's an anger that I feel kind of hot, even though it's freaking cold here in Minnesota. It angers me, and I've chosen to do something about it, and that's why I've chosen this career. I want to do something about it. What I can tell you is that I always get asked by legislators at the state legislature, right? Well, what's the difference? What's happening with Latino business owners? I can tell you that what's happening to small business owners is it's what's happening to every small business owner across the state. They're all the same. To me, they're all the same issues. However, there's still some systemic barriers that they still face to access the same type of resources that some other small business owners may have the connection because they have the connection to their local legislator, or they know they know exactly what bank to go to if they need a higher line of credit or whatnot. As I mentioned, the Latino population here is very young. That means that a lot of the businesses that have started here in the last 20 years may have only have one relationship with one bank. I mean, I will tell you, I have multiple relationships. I should never just go to one, right? And so to tell you about not just systemic barriers, but the relationships. And relationships work both ways. It's like, some folks are doing just well focusing on the demographic, right? If you're a realtor and you're doing really well just selling homes here in Edina, why would you change, right? Well, what I would say is the demographics are going to change. Like, not only am I interested, I can tell you a lot of Latinos who are interested in buying a home here. You may still be good for the next 5 years, but in 15, 20 years, what's your plan? I got a plan. So I think that there's a way for everybody to be successful here. To address racial disparities is for everybody to make money. If you're interested in making money, you all can make more money by ensuring that the people that you're working with are also making money to continue your business.
Thanks. That's, I think, really helpful to have a sense just overall of the landscape. And you talked about kind of access to credit and some of the key relationships that small businesses need. That was something that we saw a lot of in the pandemic, especially with access to the PPP program. In particular, there were a lot of small businesses that were looking to access the PPP program, but if they didn't have an existing commercial relationship with a bank, they really struggled. And especially in the first several rounds. And so I appreciate you raising that. Kasey, you're with Bell Bank Mortgage, which I realize is kind of as on the housing side. Do you want to talk a little bit about, I'd be interested in hearing what you're doing to address the relationship piece that Henry just mentioned.
There's a number of things that we're doing as far as looking at the relationship piece. We're really looking at how can we better partner with communities, how can we better be in communities, how can we better engage people who have the lived experience, and then how can we better meet their needs. So like one of the things that I've been working on is with the Homeownership Opportunity Alliance. It's a coalition of industry professionals here in Minnesota with a passion for closing the homeownership gap. So one of the things that we did is we did some community engagement dinners and sat with community members and talked about what were their hopes and dreams, what prevented them from becoming homeowners. And we came up with 4 common themes. And one was people didn't know if their credit was good enough. Another theme was that people thought you needed 20% down to buy a home. And that's just not true. I think looking at some of the programs, even with Minnesota Housing, with as little as $1,000 down, and you can get up to $17,000 in down payment and closing cost assistance, and people just don't realize. If you go to a lot of the websites where there's mortgage calculators, it automatically defaults to 20% down. The other thing that people didn't realize is that ownership could be more affordable than renting in certain communities, in certain areas, and just didn't know what those expenses were. And then the other thing we learned was that people didn't know that they didn't have to do it alone. Minnesota is really unique in that we have this wonderful network of nonprofit homeownership advisors that provide free homebuyer education and counseling and financial wellness services. So really looking to connect people to someone who can help them on their homeownership journey, no matter where they are, whether they have barriers, whether they're ready today, whether they're ready tomorrow. So really looking at how can we be in community and support community.
Thank you. That's, I think, really helpful to hear. It sounds to me like there's a little bit of a knowledge gap, right, that you're trying to address from a relationship standpoint. So there's like, do you know the right bankers, and then do you actually know what's potentially available to you? And I think we hear that a lot, at least on the education side. There's all these grants out there, this is how you apply for college, but if you're not in a community where people have gone to college before, there are people around you who can support you, then it becomes really challenging. Louis, I want to turn to you. What do you think are some of the root causes that we're talking about in your particular line of work? You started by saying the best social service program is a job. What are some of the other big barriers to people getting access to that #1 social service program?
Certainly. So if there are any people in here who were professional officers, such as myself, you know that they forced us to study history. Because what we know is that the terrain and hearts of men don't change over time. Basically, it's only the technology. War is war. In this instance, as we talk about the disparities, it's always been about money in this country when it came to black folks. We stole my labor for hundreds of years. Now think about that. Just imagine all of our people for 400 years from now working for free for somebody. Only 3 factors of production: land, labor, and capital. You got the land, you got the labor. If you can't control the capital, I don't know what's wrong with you. You're supposed to be in charge. Then for 100 years, I couldn't vote. If you can't vote in the United States of America, you can't make laws. You can't make laws, you can't determine how the money is redistributed. And when it finally came down, I was born in 1960. That means it wasn't until in 1977, I graduated from high school. That's when CRA was passed. Finally, if you want to come forward, look at Wells Fargo about 10 years ago, had to pay the feds back more money than David Crockett. Literally forcing people to take bad loans. And we can measure that wealth 10 years later. We can talk about exactly how much those houses will be worth today. Now let's bring it home. In North Minneapolis, you've created a community of renters. Most of that community rents, meaning on the first month every month, all the equity goes out to somewhere else. And we drive through other neighborhoods going, why can't our neighborhood look like that? And if you ever studied this, if you ever played the game, some of us are young enough to have played SimCity, all right? If you don't take care of the populace, then they begin to do things that make you have to invest in other things. That's why downtown is on fire right now. The poor folks' cup is running over. And we can't be mad at them because we created that condition. These 4 things over here is all that it takes. I know nobody in this room has ever been guilty of any of these things that they're talking about today, but you know somebody who has. You go to church with them, you live next door to them, you go to the country club with them, they work for you, they're in your family. And they will look at me and thank me for my service and at the same time deny me a loan. So I sit on a bank board, so I know how to get along. This is real. Final note. We will defeat this the same way we defeated slavery and segregation. We're 2-0. What's the plan? First, we complain amongst ourselves. Then we get friends who come along and help us. And then finally, it becomes the thing to do and the country moves forward. Government does not lead, it is us. That is all.
Thank you. So I appreciate that. We talk about, I do appreciate the role of history. I think that one of the quotes from the Racism in the Economy series from one of the presidents, I can't remember which president said it, was he's become a pocket historian because you really do need to understand the history of our nation, how we got to where we are today. It was we did it on purpose, right? We are where we are in terms of where we allow people to buy homes, in terms of who we allow access to certain things. I mean, our history says that we did it on purpose. It's been a gradual change over time. I think, Louis, you said that, which is helpful. But what are some, if you had to name a specific thing that we should work on together? Because I think you have a room of people who are interested in, we get our friends together and we move forward. What would that be?
It would be access to capital. Access to capital. All right? So, I'm the first cat in my family to go to college, all right? Everybody else was merchant marine or veterans. We all got VA loans. We could buy a house without a down payment. Everybody in my family is married in this generation and has a house. Uncle Charlie and Aunt Grace bought their house in 1954 on Walcott because they had access to capital and raised their families there, and everybody worked. We got to have Tommy. Needs capital. And there's this myth about bad loans. You make a lot of bad loans. All right, we'll pay you back. But we have to take this on beyond the DEI conversation and say it's worth the risk. And it's worth the struggle to make it right, because we do have something to gain economically. So that would be the first thing that I would put on the table. I started with work for 25 years, because you can't get a loan if you don't have a job. Fundamental, we get that, all right? But after that, the people on the other side of the table now have to find a way to get beyond the rules, regulations, processes, and practices that they've adopted and do something different.
All right, Kasey, do you want to jump in there? I don't want to put you on the spot as being representing a lender, but what are your, if you had one thing, what would it be?
I completely agree with Louis. It is access to capital, and not just for home ownership, but also for small business, entrepreneurship, commercial development, rental development. It is, looking at one of the charts, Alene, that you had up, where you looked at white households had wealth of net worth of $211,000. Latino households at $18,000, and Black households at 0. And then you look at the home ownership gap and you wonder why Black households don't own homes. If you're not, home ownership is one of the best ways to build wealth, and if you don't have the wealth to start with, it's hard to get into and purchase a home. And so I agree, it is access to capital.
Okay. Henry, do you want to jump in?
Well, I'll just, I'll echo that, but I'll extend that. I'll actually say it's not just access to capital, but affordable and patient capital. The need of our communities is immense, that if you just give them the same product you've been giving everybody for the last 400 years, it still doesn't work right now. We have to be innovative in the way that we think about capital and the way that we think about access to folks. No one's gonna start running a marathon if they haven't trained, ever. I mean, what an impact did I have when I finally became a homeowner? Just so you know, I'm a highly educated person. I would like to think that it would have been easier for me. I recently became a homeowner. Everything changed for me at that point. But it's like running a marathon if you're just like, here we go, and this is what I'm starting to see. Every bank right now is just trying to put money out. We need to start thinking about the way that it's being put out as well, not just access to it.
I wasn't expecting to have this immediate convergence around what a major policy perspective recommendation would be. I really appreciate that. But
you told me to come prepared.
I know. I mean, sometimes people say education, or Louis, you started with jobs, but I think it's really interesting. So I feel like we should stay here for a bit to talk a little bit more about so access to capital. What are some of the things that you're seeing, especially from a small business standpoint, that would be helpful from a change standpoint?
Yeah, okay, so if it's one thing to start giving folks access to capital, but the terms need to make sense. If it doesn't make sense that, for someone to be in debt for the next 30 years to open their taco shop or, the restaurant, they'll be able to pay you. They'll pay you, but are they building wealth? My thought is, how do we ensure that, let's be innovative together and everybody wins. Let's make sure you make your money, but let's make sure that this entrepreneur also makes enough money to build wealth so that they can come back 3 years later to open their second restaurant with you. And I want to bring it back to my own parents. My father still banks with the same place, very loyal. I can tell you that every entrepreneur at LEDC, and I really mean it, every entrepreneur, for the most part, continues to bank with the same 1 or 2 banks because of that relationship and that investment. I think that if you're going to invest in someone's business for the first time, you should be thinking about their success. Hey, I'm investing in this person in more favorable terms because I want them to succeed, because I want their business. I don't want them to just pay me back. And I think banks really need to think about that. Can I get an applause?
So Kasey, again, I feel like I keep putting you on the spot here as somebody who represents a lender, but I think, can you talk a little bit about what would be a driver for changing behavior on banks? As not everybody in this room is a lender, right? So if you're not a lender, how do you relate the need for access to capital to folks in this room?
Yeah, and maybe I can start just a little bit by telling you a little bit about my background. So I came to the United States as a refugee escaping the Vietnam War. So it was my parents, my 3 siblings, there were 6 of us. So we came to the United States with absolutely nothing. We lived in a 2-bedroom apartment for many years. My parents didn't have trust of the banking system. You've probably heard about mattress money. Well, that was my family. We had money underneath the mattress. They did have a bank account because they still had to cash checks and do that kind of stuff, but we were underbanked. One of their first goals was really to buy a home, because in Vietnam we had a home. Home was stability. Home was wealth building. Home is where you had your family and where you had your meals together. And one of the things that they didn't realize is that, in order to get credit, you have to use credit. They just thought that, we're being responsible if we just pay cash for everything. It's like we have to figure out how we can develop that trust and build the relationships with the communities so that we can continue to build that trust and build the relationships. I think one of the things that brought me to Bell is their commitment to really being in community and to try some innovative things. So one of the things that we've been doing is we have a 1% down program for our first mortgage financing. So it's the Bell Moving Forward program, 1% down. It is tied to homebuyer education and counseling, because it's not just about getting people into homes, it's getting people into successful and sustainable homeownership opportunities. And it's not just about one product either. One of the things that's really important to me and close to my heart is the role that housing finance agencies play in the market. They serve a lot of low to moderate income households in BIPOC communities. It's the biggest source of down payment assistance. So Bell makes sure that we're partnering with housing finance agencies in our Bell footprint. We also, if you look around, there are so many different pockets of down payment assistance by local jurisdictions, nonprofit organizations. People just don't know about them. So it's also about knowing who the community partners are, where the resources are, and making sure that those resources are available for the best product to fit with that individual person and that individual person's needs. I think too, just from an access standpoint and looking at innovation, one of the things that we're doing at Bell is we have a starfish program on the small business entrepreneurial side for people who can't qualify for just the standard business loan program. We just kicked it off about a year ago. It's been fantastic, and we're expanding that program this year. And it's really about, trying to do something different, something new, something innovative, putting aside the risk and taking some of those chances. And it's incredible.
So don't pass the mic. I have a couple of follow-up questions for you. Your story about being part of a family who immigrated to the United States resonates with me. And I just want to talk a little bit about, so how did your family get over that initial piece of being new Americans, and who helped build that trust, and what was the specific action there? So that was one. I have two follow-ups. That's going to be my first one. Go ahead.
So the first one is, I will say, you probably can't tell, but I do speak Vietnamese. And I was one of those kids, along with my siblings, that were the interpreters for my parents. And also, I think of the 4 kids, we all kind of helped to find information, and we also had sponsors. Actually, our sponsor when we came over to the United States, because the question is, well, why did you come to Minnesota? It's so cold here, And that's true. Sometimes I wonder, oh my gosh, snow. But now I've lived here for most of my life, and I love it, and I would never leave. But we were sponsored by a church actually right here in Edina, and 2 families that were just wonderful. We actually lived with one of them until we were able to find an apartment. And they really helped us, and we went to them and talked to them, and we really trusted them, and they helped us as far as figuring out what to do, and why things work the way they do, and how things work, and how to get that access to the credit. So that's.
Yeah, so I think that's really interesting, and I had a feeling that there would be a relationship story in that, and that's one of the reasons why I wanted to ask, because I'm trying to think about this from your perspective as an individual. What can you do to help either new Americans or help people develop individual relationships? And I see this a little bit. I'm going to give Josh kind of a shout out for what he does at Pimento Kitchen and trying to bring people together to try to foster the important and new relationships. It's new kind of networks and synapses in our community.
So I would say to that, it's that trusted advisor. So that trusted advisor might be like the sponsor my family had, or if we look at trusted advisor in the community as a lot of those nonprofit community groups or organizations, the LEDCs, the Summit Academies, the PPLs, the Build Wealth Minnesota, that you can go to where you can connect with someone who's already in the community that can help you navigate the home buying process, because it's not overly complicated if you know it, but if you don't know where to start or know where to go, it's having that trusted advisor and having someone who can help you through the process.
Yeah. Thank you. So again, I'm sorry to keep forcing you to answer questions here, but the second follow-up question I had was, so that was the individual piece, but what about on the corporate side? You said that you have the opportunity to develop product innovation. What's happening at the senior level in the organization that's allowing you to create new products to take a little bit of corporate risk?
Well, I think it's the commitment to community. I think one thing that's unique about Bell is their bottom line is happy employees, happy customers. So at the end of the day, it's about the people, right? It's not about the, it's about the people. If you have happy employees, they can treat their customers well, and looking at what is the best product for that person, and it's that, that pay it forward that we have. So I guess one of the things, and I'm just going to kind of talk about this a little bit, and then circle back to why it matters, is Bell Bank has a Pay It Forward initiative where they provide $1,000 to every employee to pay it forward. So it's really about employee-driven philanthropy. And it could be that money can go directly to a nonprofit, but it doesn't have to. It could go to your neighbor, that has cancer, or someone from your church that needs a wheelchair that they can't afford, or a new immigrant family that just needs help getting a down payment or for their rent. So it's really about this strong desire to make a difference, to try something new, to give back to the community, and to really be innovative and be open to new ideas.
Thank you. So Louis, you started us on this. It's access to credit. That was like what took us on that journey down the line there. And so I want to ask you, because I think that just kind of the same question that I asked Kasey is that there's and not everyone in this room is a lender. How do you translate the need for access to capital to specific actions that people in this room might be able to take?
People in this room, if you're in a position of responsibility, people tend to do the things that the boss sets as a priority.
That's right.
Not the DEI person. So whether I'm a commander or a CEO, I go down to the lowest private or the receptionist and say, this is important to me. And I'm coming to you because I know you can do it and you're gonna do a good job. They get the message from the top. Every time you walk past something, a mistake, and don't correct it, you set a new standard. And practices then become, this is what we've always done. And here we are today. So I'm not a lender. Let me tell you one more thing. Black folks don't trust the lenders. That's a big gap. So for the denials, there are a lot of people who don't even show up because we know what time it is. All right? So I give you the satisfaction of doing that to me, which is really kind of backwards thinking when you think about the fact that you're a loan officer and you go, everybody's happy when they get the loan. I always say you got it backwards. The loan officer went home and said, hey, honey, I closed that loan today. That's what they celebrate. So how is it that our ability to pay isn't as valuable as anybody else? So what do? We go to friends. When I started my business, I didn't go to a bank. I went to my friends. Luckily, I have a credit union, and now I'm on a bank board, it's all that, right? But one thing we have to do, and it's gonna take both sides of the table, is to build trust. It simply is not there. And we view everything as a gimmick because we hear the horror stories, it's in the news, and we've had personal experience. So one, leaders have to lead. If you believe in it, then you let everybody know, those around you and those down the chain, this is what you're gonna hold them accountable for. And you don't want any excuses. If there's a problem, let's talk about how we're gonna fix it. Number two, we have to communicate with folks and be straight up and say, we understand your hesitancy, but give us a shot and we won't let you down. We've got to build the trust and work together. I'll close with this. Traditionally, the federal government has been the only place that we could get our rights secured. The states don't do it. The fight today between the states and the feds is real. The feds are going to follow the people in this room. They always test the air first. You have to set the example if we're going to get change. Some of us may not live to see it. There are some in this room young enough to be around, and I'm patient. 400 years, 100 years, 50 years. I got grandboys I'm teaching. You got to set the example, set priorities, and earn the trust. If we do those three things, like I said at the top end, we're gonna be all right. It won't be easy, it won't be fast, but we'll get there.
So don't pass the mic. I appreciate that, Louis. So you brought up leadership, and I think that that's a really important piece that we haven't talked about explicitly yet. And you talked about leadership in an organization and an organizational role of building trust. Can you give me an example of an organization or a time when you had to lead and were working on building trust in community? It doesn't.
So, when I came here, I was amazed, right? Came straight from unit. Andre remembers me when I was 185 pounds, all right? Yeah, that was 30 years ago. Okay, all right. I came straight from Europe as a commander, teacher at ROTC. 100% employment, a soldier. 100% housing, 100% healthcare, 100% discipline. I had a commander saw that. So I couldn't understand little boys out on the streets with their head turned sideways, and I didn't know what a non-profit was, right? Like, what is this? And then it came out these people didn't work, and they were guys. And so I said, well, we got all the infrastructure, we got stadiums, all that, and I went over to the companies to try to get them jobs, and they asked me, well, what do the unions think of this? And I said, well, what do you mean? And the unions weren't interested because they were like, no, these are our jobs, this is how we feed our families. But yeah, but the guy signed an agreement saying he hit 20% goals. And I told my people they would get jobs. You can't have me looking bad in front of my people. And so we were at an impasse. The politicians wouldn't help, and the business owners hid behind the union, so I had a very simple solution. I said I would take 100 people down to a job site, stop them working, and they'd have to explain why I was being dragged off to jail on television, all right? And what I found out was the guys who own these construction companies, and I won't call any names, but their fathers' names were on these companies. And the last thing they wanted to do was bring embarrassment on the good name of their father, all right? And so that's when we got in the room and we talked turkey and we cut the cake and everybody won, okay? So the politicians then came and said, hurrah. The business owners had to trust me that I would deliver people who would actually make them money, and I stood behind that. The community had to trust me because I said, if you come get this training, I'll ensure that you get a job. And in the final, I didn't really care if the unions trusted me or not because I was giving them dues-paying members, and they were standing in the way. So I had to help them help themselves, and trust me, I helped them.
Thank you. So I think that's a really great story, and really hearing about people basically finding a way to increase the size of the pie for everyone and figuring out a way to kind of lead with shared wealth. So Henry, so I'm going to open it up for questions from the floor here. So if folks do have cards, you can write down your question on a card and we'll take it and start taking questions from the audience. But before we do that, I want to ask Henry to jump in on this question about leadership and what you see as, you know, maybe a shining example of when leadership really mattered and you were able to maybe change the trajectory of something to be more inclusive.
I've got many examples, probably my whole life of examples, but I'll give you one that's more tangible. When I worked at the state, everybody, to Lewis's point, talks about, you know, equity in procurement. Okay, it looks like $2 billion of state procurement a year. How much does that of contracts go to Latino, Black, Asian community? And the Latino community, when I looked it up, was getting less than 1%. Less than 1%. So, as I mentioned, that frustrated me, and I was like, okay, from now on, I'm going to do everything I can to contract folks from my community, Lewis's community, you know, every BIPOC person I can think of. And I look at the list, and you see your typical companies, and then I look page 2, page 3, there we go, page 5. That's where I could find a vendor that reflects my community. So these are the type of issues I could have just said, all right, well, I'll just always flip to page 5, or what can I do, even if it takes me year after year to talk to the Department of Administration to change that and to train folks in state government, because you could put 50 new vendors, but if they're on page 7 and or folks just don't go past page 1 because it's more work, then we'll get the same outcomes. And so that's part of the work I did, was make sure that there was more Latino vendors, even though that was not my job. And unfortunately, I have to tell you that everybody needs to stop thinking, well, you know what, that's not my job. I think that we need to start thinking as of it, even though this is not part of your job description, that equity work is part of everybody's job.
That's right.
So that's one of the examples. So
Yeah.
what was the question or are we taking questions?
Yeah, so I think that's really helpful. I think we were talking about leadership, and I think that your way of maybe phrasing it is also that it's kind of, again, a win-win. Louis was talking about that, is like, how do you increase the size of the pie? And I think a lot of times we talk about it's not just equity, it's also an opportunity. It's a business diversification, especially in a procurement strategy, right? If you only have one vendor and that vendor suddenly goes away, if you have multiple vendors, it's not actually higher risk. It's actually potentially a way of diversifying your, maybe managing
We're
away from
just so
some of it.
used to doing what's easy. It's just nature of humans to just, well, I work with John, so let's just call John. I get my pens from John every year. It's just easy. Well, what happens if we talk to Marcos and see what he can do? Price might be different. Pens might be better quality. Things just need to, we all just need to work a little bit harder.
So, but can we just stay there for 1 second? Because it's also that it sounded to me like you were personally working with the Department of Admin in the state. We were personally working on saying this is not just, we're not just going to maintain the status quo, that we really actually do need to kind of lean in, and that it seems to me to have made a difference.
Yeah, I mean, we all wear many hats. I can tell you that as Louis is explaining what he did, or Kasey talks about the Starfish program, I'm pretty sure that it wasn't in their job description to be lobbyists or, new program administrators and innovators. They got hired to be an executive director or program director, and all of a sudden we have to wear all these different hats. I can tell you that I never thought I was going to spend my entire, January to end of May at the legislature, even though I'm the executive director of a nonprofit. I can tell you that that's become a significant part of my job, because I feel like I need to do that if we're gonna continue to educate folks and make sure that resources do get allocated in the areas that make sense, not just for the Latino community, but for Minnesotans. This makes sense for Minnesota's future, not Latino's future, everyone in Minnesota's future.
Yep. Thank you. So I'm taking a couple of questions, and I was just trying to read them a little bit to see if I could group them. And there's a couple of questions in here about trust. So, Louis, you started by we need to show our leaderships and build trust in community. Kasey, you've talked a lot about community engagement, and that was one way that trust could be built developed. What else can we do to develop trust in community? Okay, I'm asking that one to Kasey.
Building trust is not easy. Louis talked about.
Sorry, Louis. You look like you're. We're going to call on you next, Louis. Don't worry.
No, it's not easy, and it takes time. It takes consistency. You can't just say, "Oh, I'm going to do this, and I'm going to help you," and somebody's just going to believe you. That's not what happens. It's about being there. It's about being consistent. It's about, the long game. But I also think too that it's about being authentic. I think if I talk to people who, we go out to different, community events or housing fairs, and, there's different booths, and I did it for years at Minnesota Housing. And it was all about, that's, you always want to work with people that look like you, but it can't always be just, we need to have allies, we need to have a bigger group, we need to have more people that care and that are doing the work. And at the end of the day, it's, if you're authentic, if you truly care, people are going to see that and people are going to know. And again, it's about that consistency, about being there.
Yeah. Did you want to jump in on that, Louis?
Yeah, I've been very fortunate. I've had people take the interest in developing me, which if you had, put that to me as a younger man, I would not have thought that it would happen, but it did. And what you want to become known for is investing in people. You want people to say you're fair, and you'll give them a shot. Back to number two. In these communities, what's been the normal practice is to extract all the wealth out of the neighborhood, to leave the businesses with nothing. Even when we talk about the ink pens, what they do is they set the volume at 1 billion, right? So a little guy can't even get in.
Right.
That's the way they do it at in construction too, right? So you can't get the bonding, you can't. It's like, oh well, we'll have you in, but you got to have $1 jillion. Oops, sorry, you couldn't get a loan from the bank.
Right.
All right. So you have to, if you want to lead and you want others, I'll give Morton some credit. Once they figured it out, they're number one for a reason. All right.
Right.
They set they set the pace, and others follow. And by the way, when I'm writing the checks as the general, or I'm writing the checks to subs, etc., they do as I say do for as long as I say do it, when I say do it. And that includes hiring other people and bringing other business along with. That is, if you want to continue to work with us, here's what we value. You have to make those types of statements out loud and then stand behind them. And people who don't follow what you're saying, you replace them with others. And then you will dominate the marketplace, and your competitors will adopt the practice. That's the formula.
Yeah, I think that's really, I think you've talked, oh, go ahead. Did you want to jump in,
Yeah, I
Henry?
just want to say, like, following up and following through with what you say. I look forward to working with Josh and Michael. Like, to me, this is not just a conversation. If there's anything that I can do, I want to be part of this, but it's you have to be part of this too. Like, I want to do something. I am doing something. Do you all want to do something? Let's follow up on that. And for example, if any of you invite me to come play golf, like, follow up with me. I really do want to come. I'm just saying.
Okay, so we talked about trust, and so trust. Louis, you started this by saying that a way to build trust is accountability, and that you follow through in what you say, and that you clearly articulate your values, and that you want people to kind of come behind and follow. Henry, you talked about equity in procurement. In particular, what role do our own workforces play in our organizations in building trust in community?
Oh wow! So I have this theory called the ant trail, right? If you put down a crumb or a loaf of bread, one ant comes out. Hour later, here's all the ants in the world, right? People are the same way. Okay, so when I put one guy on with a construction company, well, first of all, he left the block hanging with his boys and being a menace to society. Now, he's got boots on, clothes on, everybody love him on payday, he's great. Other guys who were his friends look at him and go, how do I get on? Will you tell me when they're hiring? He then says, I'll keep my eyes open, but when you come down on these people's jobs, you can't embarrass me. So he will uphold, or she will uphold, by the way, I produce more women in construction than anybody else too, all right?
Good job.
But she will bring others with her, all right? The other thing is this, and here's another piece from history. Here's a secret I don't tell many people. We've always had white friends. Whether they were abolitionists who had nothing to gain politically, economically, or socially, freedom riders, or today bankers. We are seeking you. We are seeking seekers. Seekers who want to uphold those four tenets. When we do that and our people see it, they go home and tell others. And when they tell others, that's when the band begins to form. And it's also a way that we have progress, because they want to be a part of the system. They just don't feel that they have welcoming arms. And once you send one back to say it's comfortable and it's cool, you won't have any labor shortage or people trying to borrow from you if you do those four things.
So Kasey, can you talk a little bit about the role that workforce plays from a strategy standpoint at Belt Bank in building trust in community?
You know, I think then it comes down to the people again, but not only the people, it's also the leadership and the culture that you create. Because, you know, you can attract anybody you want to attract, but the question is whether you're going to be able to retain them, and you retain them through creating a welcoming culture where there's opportunity, where there's growth, where you feel valued. So it's not just about the things you do on the front end, it's about what you do to make sure that you continue to bring value to your people and create that culture that they want to be at.
Henry, did you want to respond to that as well? Just
No, I think we can move on to the next one.
okay. Because I think, you know, I think one of the things that I thought was interesting, what Louis, you were talking about, to me, it reminded me of kind of a ripple effect, right? If you have one person that's employed and they're pulling in their friends and others, but it's also like, don't make me look bad, right? And so it's that one job, and you're in the business of helping people get jobs and be gainfully employed and really being fully participating and serving their families and things like that, and that seeing that kind of rippling out. I thought that Kasey, the Pay It Forward program that you talked about a couple of minutes ago was another kind of ripple of using your workforce to find ways that, like, almost empowering your individual employees to make their own ripple in the community. And so I'm reflecting a little bit on that. And I have so many questions here that it's really kind of hard to decide. But Henry, this one in particular is for you, and since you have the microphone, I'll ask you. We all talked about the importance of access to capital. Can you talk more specifically about the role that I mentioned in the beginning? You mentioned CDFI, Community Development Financial Institution, is another type of lender. What do you do, and what is your role in the community?
Yeah, so as a community development financial institution, the Latino Economic Development Center raises funds. Some of them come from foundations, banks, individuals, so that we can then put together a product that makes sense for our Latino business or business owners or entrepreneurs to start or again expand their business. And what I can tell you is that there's times when these very same folks, we think they have a great idea, but they've been told no to by every single bank in their community. And it's amazing what happens when you pitch your idea to the community, to the leadership, to your peers. And I'll give you an example. A few years ago, there was someone that wanted to open an ice cream shop. They call them paletas, it's popsicles, and they just weren't getting anywhere with anybody else. Well, there's already, other Dairy Queen, other folks around, but when they came to us and other CDFIs, they're like, well, that's a great idea, because there's no one selling paletas, even though it's ice cream, Mexican-style ice cream, in the state, okay? The versions of it, and not something like this. So can you imagine when I saw that, I was like, finally. I grew up in California and Las Vegas, Nevada, with this product as a young person. That's what I would love to go get. Now I can take my 6-year-old and 4-year-old to experience the same product and the same taste, which to me, that's culture. Now there's the same culture that I experienced. So to me, that was not only an important business investment, it was a cultural investment. And so to that example, that's what CDFIs, I think, have been able to do, is be able to support great ideas that now I could tell you this very same entrepreneur has no problem getting any business line of credits, because he's opened like 4 or 5 of them in the last 3 years. So that's an example. We partner with banks, we partner with Bell, we partner with other folks to do just that. Like, we'll take part of the risk. I personally hate saying risk. I actually like to say we'll take part of the investment on that entrepreneur, because the banks, they just maybe kind of need a little push sometimes, and so we'll be part of that. And that's how we use those funds.
Can you, thank you for that. Can you talk a little bit about your work with potentially local governments and cities? Do you have a perspective on what role local governments might be able to play in supporting access to capital?
So I used to work in government, so I got a lot of love for government, but man, do I get frustrated with government. Talking about innovation, I really thought that the pandemic was gonna help government really get to that point. I'll give you an example. Everything needed to be signed on paper up till 2.5 years ago. It's embarrassing to think that everybody still needs to work that way. The reality is business doesn't work that way. Yet, every funder or every type of work we do with government seems antiquated. So I don't want to frustrate anybody. I could tell you that even leaders in government are frustrated with the antiquated systems. But again, it takes leadership, it takes guts to try pushing for change. But while you push for system changes, like IT changes, please push for equity and changes too. Like that could work together.
So there was some of that innovation, and I know especially in like the human services space in the beginning of the pandemic, they had to get law changes actually to be able to do some of the services that they would normally provide that were required to be provided in person, that they were actually able to then provide those same types of services virtually. So I think that's a really interesting point about really think about process and think about, does it really need to be that way, and is there an opportunity to make it a little bit easier? I think we often think about, I used to do a lot on the civil infrastructure side. We would always think about, okay, if we have potholes in the street, people call and complain, and that's how we know there's a pothole, and then we'll go and fix it. Well, who's more likely to call and complain about their pothole? You start to see, and I know this has been in the news, you start to see differences in how people interact with government, how people interact with systems, that even something as simple as, well, we just figured you'd call if your tire was blown out by a giant pothole in pothole season in Minnesota, but it's not necessarily the case, and you end up with different road conditions in different parts of different communities because people are more or less likely to call, and so like little things like that are potentially just based on the way we've always done things that end up creating some disparate outcomes.
Relationships with government is twofold. In the last 2 years, LADC was able to administer over $25 million of federal, state, local support to over 500 businesses and 5,000 households. I'm proud of that. From going from a very small nonprofit to being able to do that, to becoming the #1 administrator of a housing program. How were we able to do that? It's because we were able to move faster than government could. Thanks to government, we were able to do that. But I could tell you that I think we probably could have done double that if it wasn't for government.
One of the things that came forward in the Racism in the Economy series on the workforce session in particular was this notion about occupational segregation that I talked about earlier, that people of color are more likely to be in certain jobs. And historically, certain jobs were excluded from benefits like Social Security and some of the social safety net, and that was also on purpose, right? Because they were either farm workers, domestic workers, things like that were historically carried out by people of color. I think the other thing that came out of that session in particular that I thought would be interesting, just in terms of talking about how we build trust in community, at the Minneapolis Fed, it's been a really important part of our workforce strategy, is we want to reflect the communities that we serve. And that being able to reflect, the diversity and the both urban and rural, as well as ethnic and racial diversity and gender, is, do we really need the pedigree that we require for every single position? Is a master's degree really necessary for that role? And do we overemphasize pedigree over experience? If someone has been working their way up in an organization, 10 or 15 years, but they don't necessarily have the degree, the bachelor's degree or the master's degree, is that really a fair constraint? And does it actually compress or amplify bias that you might see in the education system? And that, we see pretty big, I didn't talk about it, I pulled it from the slides, but we see in Minnesota some very disparate outcomes in our education system. And that 70% of fourth grade Black students can't read at grade level. Like, it's not we're failing half of them, I'm saying 70%, right? So if we take the differences in education and those disparities in education and you bring them forward into whether or not someone has a bachelor's degree or whether or not someone has a master's degree, you're really actually constraining and amplifying, again, the bias that and maybe the discrimination that they might be facing or the challenges that they may be facing from a very young age. So I just wanted to share that as kind of a thought, especially for folks who are employers, as what are some specific things that we can do. So we have just a few minutes left, about, I think, 10 minutes left, and I know I see some people with cards. So. We want to do kind of a lightning round of final questions to see. This is maybe, I think there's a number of questions that we've had on the charts that I put forward earlier, and if folks have those specific questions, especially about comparing apples to apples and things like that, come see me afterwards, because I can talk about the way that our work actually does compare apples to apples, because there were some really specific questions about this. This is maybe a little bit of a different question, but I think is maybe worth asking. So how can we have an increased minority population without falling into the great replacement defensiveness? How do we make growing the economy message more believable?
So there's a truth that we have to face, is that we do get old. And it's a phenomenon that happens if you're blessed. Living in a room, a lot of us are blessed, right? And the boomers were a very big class. In fact, on May 23rd, I raised my hand 40 years ago to defend this country. It was just like yesterday. That's thing one. Thing two, we're actually where we were 100 years ago as the country moved from agrarian to manufacturing, which led to the Great Migration, the movement of 6 million African Americans from the South to the North, which created the black middle class, which brought Brown v. Topeka, Kansas, and 11 years later, the Voting Rights Act, and 43 years later, Barack Obama.
All right.
Thing three, the pandemic has just accelerated technology. We're not gonna stop DoorDash and Instacart and Amazon and any of those things, and we don't have enough people. We're also demonstrating that war is being fought in a different way now, cyber. We don't have the people to do it. The marketplace is gonna settle this matter. That is all. We need workers. Our problem is that we built these structures that don't educate the people who are coming adequately, but we'll figure that out too, because the slaves weren't educated, but 50 years later, when the Great Migration began, they figured it out and educated their own, and we did all right. It's gonna be all right. But know this, for all those people that are worried about the big takeover, that's not what they should be worried about. What they should be worried about is there gonna be anybody to pick up their garbage, to come to your house and do the plumbing, the electrical? Who's gonna be at the bank? You tried to go into a bank lately? All right, it's all automated now. Okay, that's what you need to be focused on. Not the race, or gender, or sexual orientation, or planet of origin, but do they do what it takes to keep this country moving? And when you hear that kind of nonsense, you got to shut them down.
Right.
On the spot. Because it's dangerous for our country. And the politicians we got today are more interested in power than they are in policy, and they're gonna leave us all out hanging out to dry. And that's how you deal with that, all right? And we don't need to split hairs about apples to apples. It's been unfair, it's been unjust, that's the truth. It is what it is. Deal with it. And if you don't, I guarantee you, I will.
Kasey or Henry, do you want to add to any of that?
You know, if any of you get an opportunity to travel the state, which I have the privilege to be able to do that, I look at main streets, not just here in the Twin Cities, but main streets of Worthington and Wilmer, Long Prairie, I could tell you that if it wasn't for some of the newcomers or immigrant communities that are moving into these places, I don't know who would be taking care of Main Street. And so I think it's important to recognize that and just learn to live with what this Minnesota is. It's not becoming, is. It's already here. And so, and then another thing to take in mind, I don't know what the percentages of just biracial children that are being born right now. Just because, you know, you may not identify as Latino or any other BIPOC community, that, you know, I can tell you that my children are beautiful, and I know you have beautiful grandchildren, and people are going to be meeting each other, and this world is just changing, like changing to where I feel like even the way we talk about race is going to change faster than we think, to the point of what this pandemic has done to technology. I think is also happening to what it's doing to the way we talk about people. It's important that we start talking about people very differently, not just Latinos, Black, anybody. We need to start talking about each other in a better way. We're one Minnesotans, you know, we're Minnesotanos. I like to say we're Minnesotanos, the Spanish word for Minnesotans. And I've lived here the longest. You know, I've moved to 4 different states. It's funny when people say, well, where are you from? And it's getting to the point that this year is the first time I actually have to say, well, I'm a Minnesotan. I'm a Minnesotan. Like, why would I claim Long Beach, where I lived till I was 13 years old, or Las Vegas till I was 23? It doesn't make sense. I'm a Minnesotan. And I want everybody to recognize me as a Minnesotan.
Yeah, thank you. So Sylvester Thomas is the Race and Equity Chair, and I just want to give you the opportunity to ask a quick question. Yep.
Thank you. I can catch it, you know.
I know you can.
Hey, first I want to thank everybody for coming today. It's been a great event. I want to thank the panelists. You guys did a phenomenal job. Your talk was unbelievable. I had a couple of questions. You know, we've been doing the Black Mixer at Pimentos, and a couple weeks ago they had someone that's starting the first Black credit union, and one of the questions was access. So how can we provide more access? And you're doing great jobs at Bell Bank as far as the programs, but how can you get more access to the North Side? Because you got the relationships, maybe, education's important, but if you don't have access, and those people on the North Side need banking access, how do we fix that problem?
So there's an interesting statistic.
Oh, you want to give the mic back? Yeah, thanks.
So some banks came to me a couple months ago and gave me a statistic that floored me. Less than 1% of the bank mortgage loan officers in the United States are African American.
Okay. 1%?
Less than 1%. All right. That means I don't know any. And if I don't know any, my grandboy doesn't know any, let's start with my grandson. If he doesn't know that woman is a mortgage loan officer, he doesn't know how to become one. He doesn't know what they do, and he definitely doesn't know who to call about how to navigate the process. Conversely, I have a friend who lived in South Africa, a white lady, who then lived in Spain, came home and didn't have a credit rating, so she couldn't get a loan. Her father knew the bank president, he showed up at the closing for her.
Amen. Okay.
That's access. I'm not holding that against her. I'm simply saying those are two different worlds. That now you talk about the structural divide, that's the way it is.
Now, the last question is, I know you're doing great work with your Latino organization, partnering with the bank. Are there African American organizations in Minnesota that can do the same thing he's doing, that can raise millions of dollars and partner with banks that can provide access, you know, dollars for businesses and loans to the African American community? Are you aware of that?
Neon, I'm not in that world, and they can speak to it, but I know of Neon, which is over on Broadway, run by a great guy there, and there are others that are out there. You want to talk about those?
Yeah, we have a close connection with the African Development Center and the African Economic Development Solutions with Gene and Asibu. We work strongly together, and in fact, we're part of a partnership called Catalyst Partners, where we've raised about $15 million again to support the BIPOC community. And mind you, not just the BIPOC community, that's a fund that's to support small businesses, veterans, and white women. And so I just want you to know, it's not just about helping my community, it's about helping Minnesotans. It's really investing in Latino communities, investing in Minnesota.
So I would just want to say thank you so much to our panelists. We heard a lot today about the importance of leadership, the importance of expressing values, of building trust in community and accountability, and a whole bunch of other really great advice and about things that maybe we could do as institutions as well as individually. And I just want to say thank you to the Rotarians for this invitation. A really robust conversation, really had a lot of fun, and so thank you all.
Thank you all for being here. Thank you for being candid. I learned a lot of things. I really did. Way to lead. How do you say Minnesotan again in Spanish? Minnesotanos. I'm a Minnesotanos. That's it. Thank you, thank you, thank you. This is for all of you. Rotary is a global network of 1.2 million neighbors, friends, leaders, and problem solvers who see a world where people unite and take action to create lasting change across the globe in our communities and ourselves. From literacy and peace to water and health, Rotarians are always working to better our world, and we stay committed to the end. In honor of your presentation, the Rotary Club of Edina will make a donation to My Very Own Bed, a local nonprofit that provides new beds to children moving into stable housing. My Very Own Bed gives a new bed, a set of sheets, blanket, pillow, master pad, stuffed animal, and book to children who might otherwise go without. Thank you so much for being here.
Thank you, sir.
You're welcome.
Pleasure being here.
So how many golfers are out there besides Henry? Raise your hand. Oh, come on, Toshi, Gordy, come on. Kelly, David Kleins. David, you're playing at Spring Hill, I know. Okay, where is it? Bear with me, I found it. We have a guest Rotarian from Rogers, and he asked that I make mention of the Rogers Rotary Memorial Golf Scramble. There he is right there to raise money. Do you want to say something real quick in 10 seconds or less?
Well, if you want a chance to win some money, fill out the form, take your $10 in there, that'll buy you a raffle ticket to get maybe $700, which will help win something else. But we're probably the smallest club in the room, and we're working hard, and we need golfers. So on that form that's in the middle of the table is a website. You can go in there and fill in and tell us that you're going to put a foursome in or sponsor a veteran or something to help the community. Last year's funds quickly paid to make it possible for 25 new students to take welding class that the local company says if they pass the test at the end of the year, they will hire them for $25 an hour.
That's great, thank you. So I know many of you are wondering, what do we have to look forward to? Well, next Wednesday, thanks to Rob Bredding and Shelley Loberg, we have something unique called Engage and Lead Edina. Kalik Rogers is going to have a workshop on racial justice, and it's here next Wednesday night, Lindsay. And we have free things to eat from 5 to 6, and we have a cash bar. And then the actual event is going to be 6 to 7. What else do we have to look forward to? Well, a week from today, we have the Chris Ann Manola's Women in Leadership Award. Next Friday, June 10th, an Open Arms of Minnesota volunteer event where we're still looking for people. So if you'd like to take an hour and a half of your day to pack food for people that are in need, talk to Lisa Walker, we could certainly do that. June 16th is Peter Schmidt of CEO Schmidt Music is going to talk to us. And then we have the big event that everybody's waiting for, the transition meeting when Joe Hayes takes over on June 23rd. Let's give it up for President-elect Joe Hayes. Woohoo! Now there's a half-truth up there. There's the Peterson Dakota event. You know, our very own Paul Peterson will be playing at the Dakota, Gary, and tickets are available. But not only are they playing on June 24th, but they're also playing on June 17th with Bill McCreevy at St. Patrick's Church, sitting out on the lawn. What fun. Come here, great music, rock and roll, hear our own members. It's gonna be dynamite. We also have the Pat Kennedy Memorial Golf Classic, which is a fundraiser for the Morningside Club on June 27th. June 29th is our annual family picnic at Centennial Lake, so we will have a dunk tank for Shelley to be in. There's no meeting on Thursday, June 30th, but there is the Black Business Networking event where we go to Tommy's restaurant. You ready for that, Tommy?
Oh, yeah.
All right, baby. Whoop. 0 is the only acceptable percentage of poverty. Meeting adjourned.